entire reason why trading is so appealing to, me and I'm sure the rest of you guys is because dependency comes from you and completely you. That's the beautiful thing about this model of business.
Exactly.
Right. So yeah, I will continue doing it Thursday, but I'm never going to be doing signal chats or anything like that. Even if some of you guys want that,
it goes against you're kind of trying to teach us how to fish,
exactly,
not providing us with the fish, right? So
yeah, and in my opinion, it's just a filthy and disrespectful way to get money from you guys when you guys are trying your best to learn. And if you guys aren't trying to learn, then I'm not gonna do I'm not gonna do the whole signal thing just so you can make money in the meantime. You guys have to get your own money. You guys have to fail on your own. You guys have to feel the pressure, because otherwise it is not going to make you into the trader that you would be if you had that pressure. So that's just my whole thing with that. And I think people who want a signal bot, cool, but it's not going to happen. And get Matthew Scribbs Premium, because he does that, but I don't.
Yeah. That's true.
Yeah.
So did you learn the strategy from him, or was it something you kind of came up on your own?
So I was I'm actually this might make me seem crazy, but I was going back pretty much every video of Matthew Scriven stuff, even on his TikTok, and then I went through his winners page and I was looking at all the executions that he called out. And I pretty much was just marking out every little fucking thing. There was a bit, he gave a bit of it away, saying that he was doing session OTE, Asia Fib, and 3-minute OTE entries. Right. So at that point I had grounding to look for. But yeah, so I pretty much just figured this shit out by looking at his winnings and then going and marking out some concepts that he was telling us. A lot of people don't know the strategy with him because, he doesn't really teach the entirety of it unless you pay for his one-on-one or premium. But, most of the time when I was looking through, I could put a lot of this shit together, especially times to enter, an entry model itself. He does 3-minute OTE after the first tap of session OT or stuff like that, which is what a lot of people are interested in. But I find a lot of the times that it doesn't get hit in a volatile market. So that's why I changed it up to the 2-minute OTE, because of backtesting his strategy after I figured it out. So yeah, to answer your question, yes, I did figure this shit out. And it did originally start with me duplicating his strategy and trying to learn his strategy. But then as it went on, when I was backtesting, I found things that I saw to perform better. So that's kind of how I went through. But then I add that with the whole, my entire year of market experience and seeing what's draws, what's not draws, and being able to identify is a huge help with the strategy as well, because bias is massive. Bias is super, super, super big thing with this strategy. You need to understand how to read the market, right? You need to. Even if you are against bias, you will still make profit if you're going to take profits like I advise you guys in the video, taking partials at areas where it can invalidate your idea and it can reverse. Doing that is going to make you profit no matter what. And it's going to be at least, 100, 150 points usually until you hit that point. So, you'll be making $700 to $800 if you're using a mini, right? That's something you guys can't complain with, right? So, and then at that point, I always say, leave a runner, put it break even. Leave a runner, put it break even. And then, you've already got your piece of the pie. But if you get the cherry on top of your cake, or, on top of your milkshake, I'm sure you guys wouldn't be pissed off about that, right? A perfect explanation or a perfect example of that is, let me share my screen. Literally Friday here. Boom. Friday here, we had the entry model present itself with New York Lunch, and I'll show you what I was talking about. So this was a session OTE setup here. We went ahead and did OTE for both sides. And do you have the settings for this?
I don't.
Okay, let me go ahead and show that for you. So 0.705 and 0.295 is pretty much just 0.705 on both sides. And the reason, and I'll show you the reason why I like having both of those on there. But
okay, cool.
So pretty much anything that can support price can resist it. Okay, so when we break through something that was priorly a bullish support, it can now be used as sort of an inversion I don't know if you've heard the concept inversion, right? So now it's kind of inverse that can use it towards the opposing side. Like here, we bounced off 0.5 of the session OTE, right? And then it was bullish. But then once we broke through and created an imbalance that lined up with this, which is majority of the time what happens, that's when we start using it to resist price, okay? But going on top of that here, my strategy and the entry here, what I was talking about prior, is we got an entry, I believe it was at New York lunch, and I think it was either a 5 or 15 minute fair value gap that was lining up. So we had a first presented 15 minute right here. Okay, we went on the 2 minute here, and we waited for it to tap into this first presented 15. Okay, after I got my draw on that, I went ahead and I drew out the range here. Okay, and then I got filled at equilibrium of that range. I actually believe it was the range prior, after we broke, displaced, and created that fair value gap. Something like that. But that also doesn't look right. But anyways, I got filled at equilibrium there, even if it was right here. Okay, stops would be at the top of that range, and then you target what you believe to be your draw, okay? So London is where I took 90% of my position out, okay? So even in this, it was 386 points out there. And then I believe that we could have went down to previous day low, and so I held a runner in there. I don't know if you saw that in Scriv's Discord, but this is pretty much the trade I took here, right? It was a pretty easy setup, I'm not going to lie. Does that make sense?
A little bit, yeah.
Okay. I really don't think this is my feel. I think I'm just confusing myself. But it was something like that. Okay.
Gotcha.
Okay.
So which sessions do you normally trade?
Yeah. So usually you get the presentation of the setup with lunch and PM. Okay. So so session OT is like the biggest thing that I use, and it's London and New York AM, right? So you wait for a session to close, and then once session closes and New York lunch opens, that's when volatility gets back into the market, and that's usually when you get your setup tapping into these points. So that's pretty much the times I get it. I also have another version of the strategy as well, where I only use Asia. Once Asia closes, I look for a swing trade with London, and I kind of just use the whole, what am I expecting the next daily profile to be? What am I expecting London to do? Either manipulate, reverse, or continuation, right? And most of the time I get that confirmation. And here's a perfect example here. When I mark this out, if it's going to be continuation, we get a tap into 0.5 or a tap into 0.75, and then we end up distributing through Asia low. So if you want to take a better trade using this strategy here, we go ahead and we wait for, let me see if there's a 5 or 15 minute gap that was created there. Okay, we wait for a gap that lines up with one of these levels here. Okay, we don't really get a fill in this session, but there's this. I wouldn't have took this because this isn't first presented. Okay, I want you guys to note that. If there's ever a 15 minute above, the chances of you getting stop rated is ridiculously high. Okay, 15 minute, 1 hour, or 4 hour for value gaps, if that's lying above your entry, it will almost always stop you out. Okay, huge thing to note. Yeah, I didn't even tap to an hourly either, but that's kind of what I look for to confirm my bias for continuation, is a tap off 0.705 or a tap off 0.5 to continue with London. And then I take big partials out at Asia, and then usually leave runners while I'm sleeping with my entry break even. But that's kind of how I get my Asia fills as well. That wasn't a perfect example, but it's kind of how I get my Asia fills as well.
Got it. Okay.
So yeah, you pretty much can trade this 24/7. What's up, brother?
Oh, sorry.
No, you're good, dude. It's good to see you again.
Good to see you too. I was just watching your other video.
Hey, beautiful. How's that going? Was the first 10 minutes as confusing as I thought it was going to be? Because I think I said it in kind of retarded terms, or I just kept stumbling over myself.
Sorry, the initial 10 minutes.
Yeah, the entire explanation of dealing range and the OTE.
No.
fairly, it's as straightforward as it could be.
Okay. All right, good. Yeah, sorry. I tend to stumble over myself or, say things in a confusing way. So if I end up doing that, just tell me to rephrase and I will. Right. But, yeah, do you have any questions, Jay?
No. I was just going over the kind of second trade concept of this, like the second half of the video there, just taking notes.
Beautiful.
Although when I was kind of essentially paper trading the trades as you were doing them, but
you're getting busted, bro.
Just to get like practice, as in like where you'd set your limits and stuff.
Mm-hmm. Yeah. I get you. I was kind of going over an example with this guy. I totally fucked up the entry, but I was talking about he was asking how do I get my entries and where do I get, or like what time do I get my entries? Kind of thought process here. And I told him I pretty much wait for a first presented fair value gap of a 15-minute or a 5-minute to enter up or to open up. That's kind of in alignment with our OTE level. And that's usually where you get your best fill, right? Now, I told them also if there's a 15-minute or a 5-minute lying above here, or above your entry or above your stop loss, you're likely going to get stop rated or at least put into quite a bit of drawdown because it's going to have to fill that in order to go back down, right? But I was telling him my entry here, which I totally chopped up. I said my entry here was from, we had a displacement range here, created that 15-minute fair value gap within there. I said my entry would have been here. That was not my entry. So I don't even remember exactly my exact entry on this trade, but it was really good is what I do remember. I do believe
was this Friday?
This was Friday.
It was 25854.
25854.
No, it was up further. So I think when we were initially going over that exactly, so you were marking out the range from AM high,
yes,
to AM low. So
okay,
and then you entered literally on that wick. So
I feel you now. Here's the reason why we had alignment of OTE with New York AM and the New York session. Okay, or sorry, the London and New York session. Okay, when we have alignment like this, we create a range. Okay, so I put a GAN box between 0.5 and whatever it lines up with, or the two that are similar next to each other. Here we get a super significant draw. Okay, this is a super key area. Okay, I don't know if you guys have noticed this with backtesting as well, but if you mark out the current range that you're trading inside of, combined with this, you can sometimes get levels like this, and they're huge reactional levels. So I got entered up here is what you're saying?
The exact same trade.
Yeah.
Basically a copy happened the day before as well. I don't know if you remember.
Yeah.
Around Asia. I think it was 2.5s lined up exactly.
Exactly. Yeah.
And I think a lot of people paper traded off that, and there was one guy specifically who ball ported his whole account off it. I remember it was you could just hear him on the phone calling his mate, being like, "I just made $3,000."
Yeah. Oh, I remember that. That was Thursday. Yeah, dude. That was a great trade. Also, okay, concepts you guys need to look for as well is these are key levels right here. Okay, 8:30 open, previous week high, and midnight open. Okay, these are things that will draw price down, and when you combine it with OTE levels that line up like this, that's why I entered my trade. Okay, I didn't even wait for the 2-minute. I remember it completely now. Thank you so much for reminding me where my entry was. But like, I didn't even wait for the 2-minute range to get created here. I just saw the huge rejection at this point. Okay, at this point, I was like, okay, this is definitely our draw. We have filled all fair value gaps above. I think we left a 5-minute resting maybe. But like I said with my rules, as long as it's not 15-minute or above, I will take the trade and I will not fade it. But if it's 15-minute, it will likely stop you out. All right, so at this point, we had a huge conviction of a draw. And let me see if I can find a place where we could have gotten fill at that point. We get a...
I remember doing this. I waited for the so the change in state of delivery, and then I got an awful fill. So see where it broke down after the... Yeah, and then it stopped me out and then ran the truck. That was so funny. I was just laughing while watching it go.
Okay, I feel you. Okay, so here is actually what my thought process would have been here. We create this range, okay, and we create a fair value gap within this range here. Okay, that's our first presented. It's below discount, yes, which sucks, but generally when you have it stacked up like this, I'm a big fan of taking these trades. I can get filled here. I wouldn't really care, right? So I would take it at equilibrium of or consequential encroachment of the fair value gap, and then I'd put my stop at the top of that range. Okay, and then my TP is going to be my predicted draw, which was previous day low here, right? We can tell it obviously didn't hit there, and I took my piece of the pie here. I took out 90% there, but does that look similar to the trade I took?
Yeah. So no, I remember Dylan when we were talking about this, about the potential trade in the Discord. I actually, when I was looking at it, I got lucky. I wasn't exactly looking at the double consequential, so the 50% and the 2.95.
Yeah.
But yeah, you actually texted into the group chat limit order at 854, and then it basically ticked it.
Yeah, that's crazy.
Sorry to throw us off, man, but when you're saying you're taking your piece of the pie, how do you decide which part that is instead of your full TP?
That's beautiful. Thank you for asking that. Okay, so generally with the market knowledge that I have developed throughout the year, and what most of you guys will begin to understand is we move from internal to external, right? All the time. So we do internal to external, and that's if you're trading with trend, right?
Okay.
Now, here's the one thing, right? The one thing is the other model that happens in the market all the time is going to be external to internal, which is retracement, or you can get stuck in what's called external to external. Okay, so these are what we call retracements or reversal. Sorry. So this would be a retracement external to internal. This would be a reversal external to external, right? And we're talking about liquidity here. So in order to play it safe and get profits, no matter if I'm wrong with my bias, I take profits at what's a high conviction area where if price was going to reverse, it would reverse here. Okay, so here we really had no fair value gaps left that were, not ran through. We already tapped this before our entry here. And all we really had was external draw being London low, right? So external draw being London low here is where I took 90% of my position because it's a session low, which is a super high conviction reversal area of liquidity, right? That could have reversed price and took out our LRL that was kind of getting developed here. But it's usually going to be session lows or first presented fair value gaps of a high time frame. So 15-minute, 1 hour, or 4 hour, okay? Those are where I'm almost always going to take my pieces of the pie, and then I'm going to leave runners, okay? Also note, it's always going to be first presenteds. First presented fair value gaps are always going to be where I'm taking my biggest piece of the pie, all right? Those are the strongest fair value gaps in the market because that is the last line of defense that is the last thing that we have to invalidate bullish trend or bearish trend completely, right? Does that make sense?
Yeah, a little bit. Yeah, for sure.
Okay, and how long have you been trading for, brother?
In terms of futures, man, I'm very brand new, bro. So I've just been trying to watch all the basics and everything.
Beautiful. Okay.
But I feel like I understand a lot more. Like someone was live trading and then kind of explaining their thought process behind it. Yeah. I think that would help a bit more. So what you're doing right now is great.
Okay, beautiful. Let me see. I don't really like backtesting with TradingView, but I can do a few backtesting trades to go through if you want to. And then we can run you through kind of the thought process that goes through my head when we're in trades or when we're about to get into trades. Is that something you'd want to do?
Yeah, man. I mean, it's up to you, brother. I don't mind at all.
Absolutely. So let's see. Let's just grab a random date. We'll go earlier in the week.
Actually, Carson, I realized we had a mix-up in time. Obviously, time zones are affected. Mm-hmm. So we obviously both mixed up times. We said that we were going to hop on at 5, so that's why I joined a bit late. It's only 4 here, so that's why.
Hey, no big deal, bro. I completely understand. Don't even worry about it. Don't even worry about it, man. And you're in Scotland, right, or something like that?
Ireland.
Yeah, dude. I heard it's pretty much just you know, super big on beer and shit. And that's pretty much
that's
pretty much it.
Yeah. like well, it's a Sunday. All my mates are at the horse racing, probably fucking hammered. I mean, we just love drinking. It's just part of the culture. Like, I mean, January. So most people do something called dry January.
Yeah.
Because over Christmas and December, it just gets like out of hand.
Yeah.
Like, the country shuts down for like the last 2 weeks because everyone's just on the piss. So
Jesus
like
Christ.
January's a good month for a reset.
Jesus Christ, dude. Oh my God. That's really cool though. I'm not a drinker, so I don't know if I'd enjoy that much, but I would, the horse races would be probably pretty fun to go to. I won't even lie.
Yeah. It's like, even without the drinking, like, it's just people you haven't seen who have moved abroad for work and stuff all come back for Christmas. So it's more, you just get to see faces you haven't seen.
Oh, that's really cool. Oh, that's awesome, bro. Okay. Well, damn. Yeah. Maybe I'll have to go there, bro. But, okay. Getting into this, guys. We're going to start with identifying our daily bias. Okay. Do you guys know what daily bias is? I'm sure all of you guys do.
Yeah.
Yeah? Okay. So you have to understand how the market moves, right? Like I was saying, external to internal. And that is what creates a bullish or bearish trend that is strong. We're getting constant external to internal, external to internal, external to internal. Okay. And the market's always going to move towards three things. I explained this in my video, okay? It's either going to be imbalances or equilibrium, okay? Those are the two things that are internal that we are always going to be searching for, okay? That's what makes the market move, okay? If we have an unbalanced equilibrium or imbalances above or below it of the first percentage, we are always going to want to fill all of them before we have our huge distributional leg up. And we're all aware of accumulation, manipulation, distribution, correct?
Yeah.
Yeah? Okay. So with that being said, it would be easier to identify our draw if we identify what trend we're in. So I start out going on the hourly or 4-hour time frame and seeing, okay, do we have fair value gaps lying below that we need to mitigate? Okay. The only thing I can see here is a new week opening gap. Okay, that's the only reason why price would go lower. There's not really any imbalances lying below that are unmitigated. Okay, and that's my thought process with that. Then we go to the hourly here. Okay. Sorry. Is there any imbalances down here that we need to fill? Any at all? Boys?
No.
No, exactly right. Because it's already been mitigated. And you, especially, I want you to look at this little price leg right here. Okay, this little area right here. Because that's currently like a range we're trading inside of. Look at what happened, right? We inverse an hourly here. Okay, and we have now mitigated this hourly here. So we have nothing else left to take to the downside. Let's check 15-minute just to make sure. Yeah, see? So all presented fair value gaps, this would be the first presented 15. Okay, all the rest are above it. Every single one of those imbalances have been filled on the 15-minute and the hourly and the 4-hour. Okay, so this gives me conviction that, okay, we're going to continue in bullish structure and we shouldn't have any reason to come down unless we create another imbalance. Okay, so we should currently be in a distributional state. Okay, because we've already manipulated into internal. And now all we have to do is move to external. Okay, and when we move to external here, I'm going to look for a fair value gap to be created on a 15-minute, hourly, or 4-hour time frame. Mainly 15-minute is what I will say. Mainly a 15-minute time frame, and then I'm going to look for price to trail back into it, and then that's where I'll look for my entry if it aligns with OTE or a strong draw, such as like a 8:30 open, true day open, or midnight open key level. Okay, does this all make sense to you?
Yeah.
Okay, and also I want to point out here, this is a beautiful example of how institutional price action happens every single day. We manipulate into a imbalance to continue bullish trend, and then we create an imbalance, and we continue to just keep going in that little, staircase thing like I was showing here, is we just continually create higher time frame imbalances to tap into, and then we go and distribute to external, right? So we're just taking advantage of this. Okay, so does this all make sense?
Yeah, definitely.
Okay, cool. Okay, so we're going to go back onto the hourly and 4 hour actually. We're going to look a little bit further to the left now because we can tell that we are in a buy model here and we're in a buy structure here, right? Now, what is external liquidity? Okay, total external liquidity is going to be here. Okay, so that's going to be what I call my objective for the day. I'm going to want to see price eventually. I don't care what it does down here. That will get figured out later, but I want it to eventually get up to this external high. Okay, that is sell side liquidity as well. I don't know if you guys are familiar with that concept.
Yeah.
Yeah? Okay. All right. Now, what else is there to target up here? Well, first presented hourly. This is a super strong thing. Okay, this is a super strong fair value gap. This is our first presented hourly fair value gap here. Okay, this is second presented, so it's not as strong, and I'd want to see price run through it. Okay, on the hourly time frame or on the lower time frame, you can see if we're continuously keeping up bullish volume through this fair value gap, then it's most likely going to get invalidated, right? And also, okay, you might be getting confused here, but let me make one more thing obvious and apparent here. After we tapped into this fair value gap, what should we be doing from that point if we're following bearish institutional structure? Well, we should be turning bearish and going to external liquidity, which is down here. Okay, we don't see that happen, right? What do we see happen afterwards? We get a bullish candle that's still continuing with volume. Okay, so that makes it pretty clear that we're trending towards this fair value gap or external liquidity up here. Okay, most of the time it's going to be external liquidity. Okay.
So would you enter at that point when it goes over the second presented fair value gap?
Sorry, repeat that question. I didn't hear the first part.
Would you get an entry at the second presented fair value gap?
I would be looking for an entry once we tap this and then once we come down to fill an imbalance, right? Because this is an extended leg, which means on like the 15-minute time frame, when we tap into that, let me see. When we tap into that, we most likely will leave an imbalance like that, right? So now we have an imbalance to fill. Okay. So this is where I'd be looking for my entry. This would be where I'd want my draw to be because we have no imbalances left below except for this. Okay, so now this becomes our first presented because we have a low and then a high created, which is a range. Okay, so this is the first presented of this range of the 15-minute time frame. So this is super high conviction. Now, however, if we do not come up and tap this hourly first, okay, and instead we come down, tap this, and then tap this hourly. Or sorry, I apologize. If we come up and tap this hourly before we tap this 15-minute here, then this could possibly get faded because we could just come sweep this high, combine it with the hourly, and then end up running through this 15-minute fair value gap to take liquidity. Okay, does that make sense?
Kind of, yeah.
Okay. All right. So those are like two possibilities here, and we're just going to kind of play it by ear with discretion, and we're going to keep the kind of, what's the word for it? Yeah, we'll just say discretion. We're just going to keep our discretion in the market here, okay? Now, we also opened up our session OTEs at this point, okay? London and AM are currently done now, okay? So you can mark out your session OTEs. Okay, London got fully consumed by AM's price action. So at this point, you're just going to mark out AM. Okay, make sense?
Yeah.
Okay, and most of the time when we're in a volatile market, we're going to look for it to bounce off 0.295, which is the previously bearish OTE that would usually push us lower down, but now inversed bearish OTE and now can be used to bounce price up. Okay, so I'd be looking for it to tap into this, or possibly tap into the 0.5 and then distribute to external liquidity. Okay, is that making sense? So if I'm looking for a continuation profile, I'm looking for it to tap into this level or this level here to bring us higher. And you get confirmation on which level when you get stuff like this, when you get a fair value gap that lines up with your OTE level. Okay, this makes it 10 times stronger, right? Does it make sense why?
No.
Okay, no big deal. Because we have filled every imbalance down here, we shouldn't have to come to this low. If we come to this low, we are in some way invalidating bullish structure. So if we're continuing an institutional, which is internal to external, right? Like I was saying, so it goes from imbalance to external liquidity and then imbalance to external liquidity. We should follow that pattern going into this 15-minute fair value gap and then pushing out of it, right?
I see. Okay.
Okay. And you might be asking, where would you take partials if we got our entry here? This first presented hourly, right? Because this is the biggest imbalance that could reverse price if we weren't going to go to external liquidity and fulfill my bias, right? So this is where I would be taking partials.
Gotcha. Okay.
Make sense?
Yeah, that does.
Cool. So,
do you explain this, man? This concept that you just went over in that video that you uploaded, raw and in depth.
Yeah. I explain it all the time. I explain internal, external, and I mention institutional price direction all the time, right? So yeah, once you realize this pattern and you can see it in that way, you'll be a way better trader than you were before, right? Because you'll always understand, okay, we're twiddle fucking around on the lower time frame, but on the higher time frame, we're making an obvious move towards an imbalance so that we can continue and fulfill bullish structure and follow institutions, right? So it might look fucking stupid, us twiddle fucking around, and you'll get confused on lower time frame. So if you're ever confused on where price is going right now and you think it's ranging, go on the hourly, go on the 4 hour, look for imbalances, look for where it's searching for, and then you can get, a more confident idea of what price is going to do. Okay.
Gotcha.
All right.
Okay.
Is this all making sense?
It is, man. Yeah, for sure.
Okay.
This is great, bro. Like this is kind of what I was talking about, going over something that you're using your thought process behind.
Perfect, dude. I love hearing that. And whatever I can do to help, bro. I tell all you guys this, man. Whatever I can do to help, just let me know. I will be literally just DM me, send it in the Q&A section in this Discord. I don't care. All right, just let me know. But from this point on, we now tap this first presented 15. Okay. Sometimes you'll see if we have a high time frame fair value gap like this that is lying above, or is the 50% range of this is higher than this line, we might not have to come down all the way to this line. We could just fill this imbalance, then get our rejection from that point and our entry, right? So sometimes OTE won't get tapped. That's fine, right? That's completely fine because we are still validating bullish structure without having to touch this. Okay, does that make sense to you guys?
Yeah.
Okay, think of it like this, all right? This is a trampoline, right? The trampoline is going to push price up irregardless of how deep it goes, right? So if it taps into here, it's even more validation that we are going to continue higher because we didn't have to trail so deep. If we trail really deep and we don't start instantly reversing, then I would be more worried that this will not hold and it will end up being a reversal profile that reclaims this, creates a fair value gap, and then gives us our entry to the downside. Okay? Is that confusing or is that making sense?
No, that makes sense.
Okay. All right. Awesome. So let's go ahead and see what price gives us here. Okay, so from this point we bounce. We create a 2-minute range. Okay. I don't know if I would have gotten filled here. And honestly, I don't know if I still would have traded at this point because, let me explain this to you. Oh shit, sorry. Lunch is about to open. Okay, lunch is about to open. That's usually when the volatility comes back into the market. And if there's any imbalances that we need to mitigate or anything like that below your entry, that is when you will get stopped out. That is when it will do a true rebalance and then end up going in your direction. But however, because there's no imbalances below, this trade actually does seem pretty valid here. And there should be no reason to manipulate lower. I put my stop at this range low here. Okay, partials would be targeting this high right here, and then full TP would be here. Okay, so partials can either be this high here, or it can be this first presented hourly, whatever you are more comfortable with, and whatever you feel like would reverse price easier. Okay, is that
okay? What's a good risk to ratio?
Good R. So most of the time in RR that we end up getting with my trading strategy is around a 1 to 6. I find that to be around the average. So
wow.
Yeah, so that would usually be the RR that you would be getting in the presentation of this model. So that's a great question. But I would consider anything above 1 to 2 being a valid RR. Okay.
Gotcha.
Okay. All right. I'm going to do one more thing as well that I didn't do yet is I'm going to mark out the OTE of New York AM and see if we have any alignment within this session. Oh, wait, never mind. We don't have to do that because, sorry, I'm confusing you guys, because London was completely engulfed. So these OTE sessions here is just the entirety of AM, right? So we already have our OTE marked out. We don't have to mark out in New York. Okay, does that make sense to you guys? Sorry, I'm totally confusing you. Does that make sense?
A little bit, yeah.
Okay.
Wait, can you go over the entry again? I'm confused why you entered right there.
Oh, yeah. Okay, so I entered because we tapped our first presented 15-minute fair value gap here of this leg, and we have no imbalances left below. So if we're going to continue trending in institutional price direction, and we're going to continue fulfilling that pattern that it goes in every single time, which is internal to external, we should not have to go to this low because they're this low or lower because there's no imbalances lying below on a higher time frame. Okay.
Yeah, I get that. I meant more like the 2 minute. Like, why did you enter on the 0? Why not at like 50?
Right here? I would have
you're
entered on the 50.
Oh, okay.
My fault. I would have entered on the 50. Good call out. So we create this range right here. Honestly, I would wait for us to be a little bit more distributional because volatility should be coming out of this gap, and then we should create like a 5-minute to validate our entry. So with that being said, if you wanted to wait for an A+ setup, this would be like a C or a B+. Then you would wait for a little bit more volume to come out of this, and then us to create like a 5-minute fair value gap, right? But here we go. So you see us, we're hitting partials from this point on, and then going up. Now I want you guys to be aware of something. There's a reason why I take partials here too. Okay, if we make an imbalance below this point, like a 15-minute or 5-minute, the chances of us bouncing from this high time fair value gap to then fulfill an internal imbalance is super high. Okay, we usually fill an imbalance from that point. That's why I take partials, because there's a chance this either inverses this or can have us have the rebalance leg here and then continue up. Okay, I have conviction that we're going to continue higher, but that's just something to know. Okay, does that make sense?
Yeah.
Okay, all right. Is anyone confused? Literally, everybody ask questions if you're confused. I don't want you guys to be shy. There's no stupid questions. This is all new to you guys, and I completely understand it, so take advantage of it, okay?
Mm-hmm.
Anyone at all? Jay? Dillo? Dillo, I know you said you had questions prior.
Yeah. So, I mean, I have something I'm going to ask you about once you kind of finish up with this concept.
Okay.
But I think my main problem would be just like identifying where price is like drawing to know like.
Okay. So like
which external liquidity and which internal liquidity.
Okay.
What direction wants to go overall.
Okay. All right. Okay, let's see how this trade plays out. But I will go ahead and I will do that for you.
Like you explained it earlier a little bit ago.
Yeah.
And that's just something that I need to like practice and continue going over myself to understand it better.
Yeah, absolutely. Absolutely. So that got break even. All right. Anyways, okay, let me go ahead and do that for you, okay? So I'll say it a million times, institutional price action, okay? This is how you're going to understand this concept, okay? So when we create an external high and we leave imbalances in a distributional leg, we will likely either accumulate above an imbalance, manipulate, and then distribute, because we know those are the 3 steps that the market takes, or we will come down, flush into the fair value gap, and then go to external. How to identify external liquidity, which is, I think, what you're asking here, right? Am I correct?
Yeah. But like when you were breaking down earlier, like how we were bullish in this scenario to begin with, from like the prior days and stuff like that. Like that's what I need to understand, how like there's nothing else to manipulate.
Okay.
Down below, so we're going higher, etc. So.
How do we know where price is going? Okay, you have to look at these big things. What imbalances, if any, are lying below that need to be filled. Oops, that need to be filled. Okay, this is the first thing that you need to look for. Okay, you want to go throughout hourly, 15-minute, and 4-hour time frame, and you want to look for fair value gaps lying below. I would preach 15-minute is probably the biggest, because that is generally what is stacked up with an hourly or a 4-hour. Okay, so the reason why I knew we were bullish on the day is because there is no fair value gaps left to fill. There's zero, right? Do you see that? Every single fair value gap has been mitigated. This was the first fair value gap even presented within this little range, right? It was completely filled. So what does price not have to do anymore? Price doesn't have to come back down and fill an imbalance or equilibrium. It's already been done, right? So yet again, the three things that the market moves for, is liquidity. Liquidity, imbalances, or equilibrium. Okay, and I want you to focus mainly on the imbalances, so fair value gaps. Okay, that's what I do, right? We have no more fair value gaps lying below, so why would price move down here? For liquidity. But here's the problem. If we move for liquidity, then we're invalidating bullish structure, which is obvious here. We're invalidating bullish structure because we're having to break a low. Okay, if we come and sweep liquidity, we're breaking a low, right? Does that make sense?
Yes, that answers like the good first half of that.
Okay.
That's really what I needed to hear.
Perfect. Yeah, so we're just looking for imbalances that need to be filled. And also something to note, we can take hourly liquidity and imbalances and react from that point on, just like we did here. They can be used together, right? We see it happen right here, and you guys often see, in order to develop our bias for AM, is we look what liquidity is lying, right? If session London high or Asia high is unmitigated or untouched, we're usually going to take it, right? That's usually the profile, right? Does that make sense?
Absolutely.
Okay, that's a TJR that's a TJR concept that I believe is pretty much the only thing that's valid left from what he taught. I'm serious. He's washed. Boys.
Yeah, I know.
His psychology's fucked too. But what were you saying?
He's more cash than he can spend. He doesn't need to trade anymore.
Yeah, he literally only makes money off of content and his course, which is honestly LARP at this point. Not to be.
If you go back to, I know we were talking about entries there. Mm-hmm. If you go on replay mode, and let's say go back to 10:35.
10:35. On here?
Yeah.
On this day?
Yeah, on that previous trade.
Okay, let's go to 10:35. Okay.
I want to make sure and so this is where you were talking about potentially getting the entry from, I think. So when it was at 10:35 is kind of when it peaks, and then it drops back into first presented and a 5-minute fair value gap.
Yes. So at this point, we can see we're overextended, right? We take out external liquidity from, just this little range right here. We take out external liquidity here. And what we haven't gotten one bit is a pullback. So that's telling me that we're creating fair value gaps here so that we can come up and then eventually fill institutional's pattern, okay? Institutional's price direction, where we take out external, okay? We create an imbalance, we take that imbalance, and then we move back to external, right? It's the staircase pattern. It's never just, we never see price just go like this. It will never happen. We're always going to need a pullback, right? So this is what it's creating. It's creating an area to pull back into. So yes, I would wait until a 15-minute imbalance is created like this, and then I would go ahead and wait for it to tap back in. Okay, so is that making sense?
So if you play, let's say minute by minute, like instead of the 2 minutes, so obviously the charts moved a lot slower while you're doing it. And so now you're kind of setting up, you're going, right, if these kind of instances happen, I will enter.
Yeah. Okay. So you want to go out. So you want to go through like conditions, is what you're saying.
So like, let's say the trade starts to move down, and you're going, okay, where am I going to put in my 2 minutes? My 2 minute range.
Mm-hmm. Yeah. Okay.
And you're kind of looking for the anchor, and let's say it hits 10:53 on the minute. 10:43. Sorry.
10:43. Okay. Let me get there. Sorry.
And that's where you said you initially put your 2 minute OTE. I think it was the top of the 10:43 1 minute candle. Where, like, you see that, where did you put you're kind of looking for your entry on the CE.
Yeah, I know exactly what you're saying. Okay, so I wait for price to draw into...
You go through that.
I wait for price to draw into what I believe is going to push price higher first. Okay? Then, from that point on, I will mark out the 2 minute range of the reaction that comes from my draw, right? So, right there, we obviously wouldn't have filled because we completely went through the 2 minute 50%, right? So, we're waiting...
Yeah.
And if you guys want to make sure that that doesn't happen to you, don't set limits and watch how price reacts, or wait for us to create an imbalance such as this. Usually,
if you switch to the 2 minutes, the chart is actually like
correct. My fault. Yeah, I forgot I was on.
If you were watching the 2 minutes, like the chart it's just barcoding. Like the next four or five candles are horrendous.
Yeah. So wait for some distribution like this, right? You see this? We have displacement. And do you guys know what displacement is, or are you guys just like, I don't even know what he's talking about?
Yeah.
Okay, so let's just sum it up to this. Displacement is pretty much when we create a fair value gap through a high or a key level of liquidity. Okay, this is what we call displacement. All right, it's generally when we can create and hold volatility throughout this level that usually or should reject if we were to be going in the opposite direction. Okay, but this validates first off, the volatility that's coming from what we believe to be draw. And second off is validating bullish structure. Okay, this is just what we call lower time frame alignment that taps into a higher time frame fair value gap to fulfill higher time frame structure. Okay, are those all confusing words to you, or are you guys getting that?
No, that's good.
Okay,
that makes sense.
So we're gonna.
I'm more saying from like if you were actively trading this.
Yeah, if I was actively trading this. And if I were you guys, and this is actually what I do because my A+ setup involves this, I would wait for a 2 minute leg, something like this, coming from it. At that point, then I'd start marking out my range. Okay?
Yeah.
Because when we do this, we're likely to leave imbalances on the 5 minute or 15 minute that are going to align with your consequential encroachment or equilibrium of your 2 minute range here. Right? So let's see. We have to create a range. You know, but in this instance, I wouldn't have taken this trade, and it's due to this. Okay, we already took out external, and it was also a session high. So this invalidates my idea. Okay, because we already met one of the objectives, or an area that could reject price stupendously. Okay, so does that all make sense?
My point. Yeah, because initially you were saying, and this would have been my trade, but I've got the monitor up here, and I was kind of going, like, I don't know how I'd be entering this trade just because on the 2 minutes it was barcoding.
Yeah. No, I would not enter this trade. And this is exactly why discretion is super important in the market, because you'll see this, and you'll get FOMO. But if you're not getting your entry model and we end up going to external liquidity, it already took out a place that would have been break even for you. And at that point, if you take out a place that could have been break even for you, there is 0 point in you entering the trade, because the entire reason why you would have been break even is because it could have invalidated your idea. Okay, so if you get in FOMO right here, not only do you have now a 5 minute imbalance down here, you also have an unfilled equilibrium of a 2 minute that will obviously stop you out at some point, right? You might get lucky and it might draw even higher, but chances are, no, it's not, because we've now reached external. And we know the model, external to internal, we now have to come down and fill an imbalance, right? We have to get that retracement leg. So you're going to get stopped out. Like there, it was lucky. And the reason being is because we opened up that 15 minute here that protected your stop. But if we didn't, you would have gotten fucking cooked. Okay? Easily cooked, right? Does that make sense why?
Yeah, no, that was more. I was initially confused because there was just no, like you said, there was no displacement creating any imbalance, which then got rebalanced. So I was kind of going.
Yeah, thank you for asking that.
So that's all perfect. Thanks very much.
Yeah, of course, man. Yeah. So, sorry, go ahead.
I was just going to ask, could you theoretically, if you wanted to take like a lower, like go into this trade with lower risk, take it just off that bullish engulfing?
Off this?
Like right there? Yeah, just enter off that first bullish engulfing handle.
Yes, that would be
like low risk.
Absolutely. So this would be a different model, but this is what we call a breakaway gap in ICD Confluence. Do you guys know what that is?
Yes.
Yeah.
Okay, so it's pretty much just the displacement fair value gap that gets created. Okay, so at that point you're seeing a huge sign in volatility being changed. I don't like this, however, because it's kind of ignorant to enter when you're not exactly. Well, actually you could have, but it gives you more drawdown. It gives you more capability of losing and higher risk. That's why I hate these, because in order to invalidate the idea, you'd have to go down to this low. And that with a mini, that would be, a $1,250 stop. And that's just stupid. So
I'm saying, what if you got in on like the first or second candle down lower, like
the change in say delivery. And
like something like that.
Yeah, dude. I mean, sure. Yeah, if you got in right there, if you feel confident enough in the trade, sure. But that's just not my entry model that I take. That's been proven for me. But if like I'm saying, bro, if you guys want to take these concepts and put it into your own strategy or your own words or your own way of trading, dude, please. Like, I'm begging you guys, man, do that. That's exactly how you become a stupendously good trader, is by realizing stuff and making it work in a way that you understand, making your own style, So the style for me is just, I wait for a tap into the 50%. If you guys want it to be off this break or CISD, you're welcome to, right?
Yeah, I was just asking your thoughts on that, because a lot of the times I do see price just take off like this and not really give you that entry you really want.
Yeah.
For example, like the other day on NQ, like price, people were in shorts off market open, and price just leaked like lower the entire day almost.
Yeah.
And I'm how did they get an entry on that when there's like, it's just going straight down?
Let's see. What were you talking about this day?
Yeah.
Okay. Let me show you. And let me show you why it did this. Okay. Fair value gaps to determine your daily bias. That's the exact reason why. Every single imbalance before AM was filled, so we did not need manipulation. Fuck, I lost the day. It was this day. Okay. Hourly had 0 fair value gaps. You see that? 0. Okay.
Okay.
All right. I'm going to mark this out, by the way, because I'm going to lose my place because it's going to keep putting me in random spots. Okay. There's no hourly imbalance. Okay. 4 hour. 0 imbalances. 15-minute. 0 imbalances. All of them are filled. You see that?
Mm-hmm.
Okay, so what does AM want to do? Okay, well, before AM, we create this 15-minute fair value gap. Okay? That's the only thing there is to fill. That's literally the only thing there is to fill until we dump to liquidity if we're in bearish structure, right? So that's why we got a huge dump. Okay, that's how people got fills, because they understand if there's no imbalances, then there's no motive to go up. Okay?
Okay.
So yeah, go ahead, sorry.
I was just going to explain my thought process.
Mm-hmm.
This is kind of looking back at sort of TJR's teachings.
Yeah.
I was looking for it to take a high, like manipulate a high before going lower.
Right. Yeah.
And it just never did that.
Yeah. So that's the one thing with TJR strategy is, he, I'm pretty sure he waits until a session high is taken, right? He goes session to session pretty much.
Session or 1 hour.
Session or 1 hour, right. Yeah. So the thing is if we are in such bearish structure and we have no incentive at all going to the upside, I mean, you can wait for a high to get taken, and that might be the smarter idea, because most of the time when you are in, normal price action, not these huge dumping, price actions like this, it does end up taking hourly and then having a reaction. But what you have to understand is fair value gaps are just as strong, right? Fair value gaps are just as strong, but the only thing that's bringing us to an internal high or internal liquidity. All right, do you guys know or are familiar with internal liquidity?
Yeah.
Okay, the only thing that's going to bring us there is if we have a 15-minute or hourly above it that we mitigate on top of this internal. Okay?
Oh, okay. So like what you're going over right now is kind of part of the question I wanted to ask you about.
Okay. Yeah, absolutely.
Like I'm going to have to share my screen to like kind of explain it.
Go ahead, man. Let's see it.
Let me see here.
I'm loving this. And is anyone else in here wanting to ask questions? Anyone else at all? You guys are just sitting in here watching, man. You guys are welcome to ask questions if you're confused. No? Okay. All right, man. Go ahead and continue, man. Let's see. Let me watch this.
Okay. So let's say we're in like bear structure here. We're going down.
Mm-hmm.
And we create this leg.
Yeah.
And I want to mark it out with my fib.
Mm-hmm.
Right here. First of all, at what point do you consider a leg to be like rebalanced and ready to like distribute back down?
That's a beautiful question. That's a really good question. Thank you for asking that. Your answer to that question is when we have every imbalance on the 15-minute filled. Okay? 15-minute filled. All right?
Okay.
Okay.
And then, because this is probably where my strategy or like how I think kind of goes wrong. I like to think that if it comes back to equilibrium or higher or above, vice versa for bullish trends, that's like a valid rebalance in my opinion.
Okay.
So let's say it pulls back to the 50% and then continues lower, leaving this internal high.
Mm-hmm.
Would it be a good idea to wait for a pullback? Like, let's say if we do this entire leg.
Yep.
Right here.
Mm-hmm.
Wait for a pullback to the like OTE level, which is taking out this high and getting you your OTE entry, and then looking for like a break of structure or something to the downside to play that back towards.
Okay, I see what you're saying.
External liquidity.
Okay,
so it's like an internal sweep.
Yeah. To external liquidity. Yeah.
Yeah, but you want that like initial pullback to create that internal high.
Yeah. Right.
That's below the 0.705, so that you can get a pullback of the entire leg to the 705.
Okay. Yes, but let me show you something. Like, this is what I'm saying, right? When I was explaining that, the only way that you're going to get that pullback into that internal high is if we leave an imbalance of a 15-minute or higher above that we never fulfilled. Okay, that's the only time we're ever going to get that sweep. So your true draw is actually this. But from TJR strategy, you're just seeing, okay, we swept an hourly high, and you're not caring about this. This is the true draw, right? Fair value gaps will almost always be the true draw that brings us higher. It will almost always. That's why I love them so much. Now, the way that you could play this smartly is if you had an OTE area here, and it was lined up with a 15-minute or 5-minute that was left. Okay, at that point, yeah, this would look like a super good entry, right? So does that make sense? Because now you don't just have these, you don't just have these fucking levels that mean something to you. You don't just have these levels to play off of. Now you have true conviction because you have now 0.705 and the first presented fair value gap that was left plus this internal liquidity that was swept. Right? So from this point on, now you have three convincing things that are telling you, okay, price has to go up if we're bullish. It has to, right? This is like the only other thing that it could have went to. From that point, yes, that would be a valid trade. Okay?
Okay. That actually helps me out so much because sometimes I love this setup.
Yeah.
And I love especially when there is an imbalance there, I'm like, oh, okay, this is even better. But sometimes I'll take it when there's not an imbalance and the price is just reversing.
Yep, and that's exactly what would happen, bro. If you don't have, first off, if you have no imbalances up here, and you've already filled EQ, like let's say this distributional leg didn't leave an imbalance, and all it left was EQ to get filled, and it got filled. Okay, like this. Okay. Sorry, and EQ got filled, right? Let's see. Sorry, let me get this on here. Okay, EQ got filled. At this point, we should have, first off, look and see if there's no 15-minute fair value gap in this leg. Then, look for like a 5-minute. But it should not have any reason to trade back into this range because it has no imbalance to fill, and the only thing it had to fill was EQ. Okay, so the only thing it had to touch was equilibrium. All right, from that point on, because there's no imbalances below, price should go to external. Okay, because we know how the institutions move the market, and it's imbalance to external liquidity. Okay, imbalance to liquidity, imbalance to liquidity. So if there's no imbalances below here, and this was the only imbalance was 0.5 not being filled, and it fills that, now there's no reason to go down except for liquidity, right? So from this point on, if we have an invalidation of like a 5-minute, an invalidation of like a 5-minute fair value gap, which means we inverse it. If we continue lower, we're going to grab this liquidity at least because there's no imbalances here left. There was only the 5-minute. We're going to grab this at least, if not go all the way down. And that's why TGR's strategy is good in like a manipulation reversal kind of sense, because let's say this was Asia, okay? Let's say this was Asia session. And Asia session, we just had this distributional leg, okay? And then London manipulated and continued higher time frame. Let me go ahead and, sorry. London went like this, right? Let me make a different color too. But then London, continued trend, which is usually what it does. Okay. Then going into the day, what we've done is we swept out session liquidity after it ended, okay, which is London high. Okay. New York AM opens up. What are we going to look for price to do? Well, we've already filled all these imbalances here, or if we haven't filled this imbalance, we're going to wait for it to pull into here and see our reaction. Okay. If this was a true reversal here, we'd run all the way through and then to Asia low. So from this point on, if we invalidate this fair value gap, the only thing we have to do is grab external liquidity, which is previous day low or Asia low. Okay, so like if you were taking a reversal pattern off of New York AM or London strategy, TGR strategy here, then you'd see that happen. Okay, we'll say this was a 15. I apologize. We'll say this was a 15-minute. Okay, you'd wait for us to inverse and then possibly tap back in after we inverse to this, or tap into a fair value gap that we created above it, like a 15-minute here. Okay, I'm sorry, this could be confusing because I'm literally 1,000 miles per minute here. But there's literally nothing to draw down here except for liquidity anymore. So if we're reversing, this is the only way that this would look attractive to the market, and that's the only reason why we'd be trending down here. Does that make sense?
Yes, absolutely.
Okay, I was sorry, I'm running like 1,000,000 miles a minute here with this, and I was explaining like a million different things.
Like the big piece I seem to have been missing was just like incorporating imbalances correctly.
Okay, all right. Yet again, the
like
only way
you've made sense to me now.
Okay,
but like that's what I was missing.
Okay, all right, yeah. So if anyone's confused, the only way that fair value gaps should be incorporated is to confirm drawn liquidity for the beginning of the day or for your OTE strategy. Okay, listen, no setup with this OTE strategy is going to be A+ unless you have a confirming area of conviction, like a fair value gap that was left on a higher time frame. Okay, then you want to line up your OTE with London and New York AM, and you want to see, okay, what first presented, okay, note first presented, what first presented fair value gap lines up with an OTE level. Okay, from that point on, you have full conviction that this area of price or this OTE level is going to hold. Sorry. But this OTE level is going to hold, right? This is where all the conviction is. All of it. Okay? This is the only place it should have to drop because there's no imbalances below this point. Okay, so then we're confident in our entry. Okay, let's say, sorry, let me put this line here. No imbalances below true first presented. Okay, so is this making sense? Because the market only moves for imbalances and liquidity. If we have one imbalance below and we're trending down, this is all price is moving to, unless we're reversing. Okay, if we're reversing, that's when it would go through. Okay, and how you would know that is usually we're bouncing off of a higher time frame fair value gap, like a 4-hour fair value gap from a previous distributional leg down, and we were truly in higher time frame bearish structure, but you didn't see it, right? Like that. That's when I'd be looking for a reversal pattern. Otherwise, listen, I'm looking for higher time frame structure to continue. Okay? That's it. Does that make sense?
Yeah.
Okay, be honest, guys. If this doesn't make sense, like, please be honest. I'm begging you.
Yeah.
I can't, because
definitely gonna have to practice this, but
yeah.
I love it.
Okay. All right, and you guys are understanding the concept internal to external and first presented almost always being draw.
Who is that just speaking there? With you guys.
I believe that's Dylan.
Dillo, what I'd suggest doing is like going through the videos he has and then using Trading View on like if you have a different, like your whatever you're trading on, and like do it live as he does it. Is it fucking
yeah?
And third
I'm in the middle of that raw in-depth explanation video.
Yeah,
like halfway right now,
because it just made like it's just, you can watch it and understand, and that's great and all, but actively doing it, it just kind of clicks a lot better.
Yeah,
that's what I've
found. And guys, I love this. Okay, honestly, like, listen, if you guys want to do one-on-one calls, hit me up. Okay, because in order for you guys to learn this, I want you guys to do it on your own, and I want to be able to supervise you and tell you what went wrong, why it went wrong, or, you know, validate your ideas or invalidate them. Okay, so seriously, ask me. I am open. I'm doing this for free. I believe it's, you know, kind of God's telling me that I need to help people, and I want to, right? So please take advantage of the help that you're receiving from me, because I've went through the failures that I don't want you guys to go through. I lost $7,000, you know, the first 10 months of me trading, right? I don't want you guys to have to lose that money. I was in the worst time of my life. I didn't have money for groceries or money for gas. Okay, I don't want you guys to go through that pain. All right, I really don't. That's something I really feel like a duty in life or a purpose to keep you guys from doing. Okay, and you don't even know who you can trust anymore in the trading space, because half the time they're LARPing, or, you know, they're sleeping with a trader, like this one bitch named Zaloria or whatever her name is. I see her all the time. She's just posting videos saying buy my signal course. She's had no success, and she's just LARPing off of all these other traders that she's fucked. That's it. You know, so I'm telling you guys right now, take advantage of my time, dude, because I want to help you guys. So Dillo, how about, or Dillo or Jay, okay? How about one of you guys shares your screen? Let's go ahead and let's go through a live example on replay. If you guys are comfortable with that. Are you guys comfortable with that?
Yeah, can I ask one more quick question?
Yeah, absolutely, dude.
So when looking at the higher time frame chart, like right now I'm on the 4-hour.
Yeah.
Do you consider like bullish or bearish trend like based off structure or like what it's respecting? Because like, let's just say what I see here initially, and I'm very bad at this. This is why I'm asking, is I see like a high, a low, a higher high. And then is all this just like a retracement or is price reversing? Like, how do I know which one's happening?
Dude, that is a beautiful question. And let me explain that to you. So do you see how there's that first presented 4-hour right there?
Right here?
Yes, right there. And then also, do you see that bearish one that was created?
Right. Yeah.
Okay. So after we tapped that bullish first presented, we should be moving to external liquidity, right? Based upon your structure being internal to external every single time, right?
Right.
But look at what we're doing.
This is what we would want to see, because there's no other imbalances on this leg.
Exactly. But look
if we're truly bullish.
Yeah, if we're truly bullish, we'd want to see that. But look at what price is doing. Instead, it went internal to external on bearish structure, going to your lows. Do you see that?
Yeah.
And now that there's no imbalances below, we have just liquidity to target, right? Exactly right. We have those lows to target right there. So, no, we are bearish, 100% bearish.
Okay.
Right?
See, I see that, and I'm like drawing out my fib on low to high.
Yeah.
I'm like, it's tapping to 0.9.
Yeah.
It's just doing a retracement.
Yeah. Yeah, I get you.
But now...
Okay.
Now I'm incorporating the imbalances, like I said earlier.
Dude, imbalances are huge. They're huge to identifying structure. They're huge. But can you go on a lower time frame, like the 15-minute here? Do you have the indicator for ICT kill zone and pivots?
Yes.
Okay.
I used.
Okay, put that shit on. Perfect. Actually, hold up. Do you have this one?
Yeah, I can.
This one. Sorry, bro. I don't mean to fuck up your chart. If you don't want to do this, you don't have to.
No. It's fine. I just like the looks of the other one better.
I get you. Yeah, it does look better. Okay, so go from London to Asia with your OTE now.
So like London
or sorry, London to New York. I apologize. London to New York. I apologize.
London up to New York.
Okay, so now that we've identified our structure is bearish, what are we going to look for? And do you have this? Do you have these settings for your fib? The 0.295 and 0.705 here.
I have the 0.705. I can add the.
Sorry, bro. Hey, I don't mean to be fucking up all your stuff, bro. I really don't. I apologize.
No, it's okay. I literally had this stuff and I changed it.
Okay.
Like last night.
Perfect. Hold up. Was there a negative before that?
Yeah, it doesn't need to be negative.
I apologize.
I make it black so I can see it. There it is.
Okay. So because we've tapped in that 4 hour and we're respecting that, and we're trailing back down to 4 hour liquidity after we took the first presented bullish, that's saying to me, okay, we failed bullish structure already. Okay, we've already had this is honestly the true market structure shift, okay? Because structure shifting from internal to external bullishly, now going towards internal to external bearishly. Okay, so I'm obviously bearish on that day. And sorry, are we on the same day here? Perfect. We are on the same day, right?
Most recent.
Yeah. So Friday. Okay. So we're going from obvious structure here, right? We're saying it's bearish because we failed to go external and we were in prior bullish price action. And we took the first presented and failed to go to 4 hour external high, right? And now we're taking internal for bearish, the 4 hour imbalance, and we are now running towards external liquidity. So we're now bearish, right? That's confirmed. So from that point, I would look for us to reclaim these areas, okay, and get confirmation that we're continuing down. Like now we have our areas to look for, our point of interest. Okay, that's what I'd say. These are our point of interest. 0.295, 0.705, and 0.5. Okay. I'd want to see something like this. I'd want us to see us come down, reclaim, tap here, come down, reclaim, tap here, come down, reclaim, tap here, come down, reclaim, tap here. Okay. That's what I'd want to see. That's what you'll see almost 100% of the time using this strategy is you'll see it retrace up to OTE level combined with a fair value gap or imbalance of the first presented. And then you'll see it continue down in bearish trend, which is what you're seeing here, right? Very beautifully, right? So at this point, you're saying, okay, these are the areas where it should retrace to at least, right? This is your little range area. Now you're going to add in the imbalances to verify that, right? You have a 15-minute, and that's pretty much it right here, okay? That's all it needed to go into. This was your first presented 15. We're obviously in bearish structure, right? So we have our bias. We have the OTE level supporting us because we've now broken through OTE, which means that this is now bearish and should be an area of resistance, right?
Yeah.
Okay, so we've inversed this. We now want this to be resistance. On top of that, we have what? A first presented 15-minute fair value gap, the strongest one, okay? So from this point, after we tapped that first presented in New York lunch, I'm going to be saying, okay, I want to get an entry here. So I'm going to look for, after we tap this, a 2-minute range to be filled, right? So we didn't get a perfect fill here. Jay called me out for this. We didn't get a perfect fill here, and I wasn't exactly using my entry model when I entered the other day because this was enough for me. That's just because of market experience. But since we're just learning this, and you guys are starting to understand, okay, 50% of the range, this should have been your fill. Okay, this should have been your fill right here because we touched what we believe to be our drawn liquidity, our imbalance. Okay, then we got our 2-minute displacement leg. Okay, and then we tapped into 50% of the range here. Okay, this is not a beautiful looking setup, but this is what it should have been following my strategy. This is what it should have been, right? Does that make sense?
Yeah.
Does it? That was shaky.
Hold on. I'm just trying to keep up.
Okay.
So
yeah, let's run through it on your chart, bro.
I don't have New York lunch out on here right now.
Wait, what?
It's all just combined with PM on this indicator. But
okay, New York lunch starts at 12. So it's literally just 12 p.m. 12 New York time. Yeah, so right there. That's perfect. So that's essentially when you should be looking for your entries, by the way, boys. It's almost always going to be New York lunch.
So this is the reaction.
Yeah, so that's the reaction. Yeah.
Off the first presented.
Yeah.
And you're just getting in at 50%.
Yep, exactly right. And then I'm putting my stops at the top of the range, and then I'm leaving it to run to where I believe it's going to be. Okay, so I take partials at London low. Why? Because that's a super high conviction place for us to possibly reverse from. Okay, now, then I'm going to target what I believe to be draw or external, right? External liquidity. So go on the 4-hour here. Since we filled a 4-hour imbalance, where should we be going? External liquidity, right? What's our current external liquidity? It's this low right here, right? So if you want to go through that as well on your chart, look on the 4-hour. Where's your external draw? Where should it be? It should be this right here, or even further down here. We could even go all the way to here, right? But to be safe, here. Okay. Does it make sense?
Yeah.
Okay. All right. So is this all clicking a little bit?
Yeah.
Okay. So that would be your entry. It wouldn't look beautiful. And honestly, I don't know if I even would have took that one because we didn't have good respect of the 50% here. But, right here, you should have actually gotten filled. So, because that was the first tap into the 50%. So, yeah.
The price action that day.
There's a 3-minute fair value gap there.
There is a 3-minute fair value gap there. And thank you for mentioning that, right?
705 level 2.
Yep, that's the reason why we came up higher than the 50%, because we created a fair value gap that was above my entry, right?
That's what I like, right? That's what I would be looking for.
Boom. See, and you know what? That's cool. If you want to do that, bro, do that. Because if there's an imbalance, we're likely to fill it, right? So my fill was right here just to be safe in case we didn't open up a fair value gap, and because we tapped into a 2-minute. But dude, I didn't even see that 3-minute, and that explains perfectly why we did end up going and taking this protected high, because a higher time frame had a fair value gap lying above, right?
Oh yeah, that was going to be one of my other questions. How often do you incorporate protected highs and lows?
I incorporate it all of the fucking time. I mean, my entries are pretty much like my stop losses are pretty much placed above a protected high every single time, because almost all the time my draws are coming from fair value gaps with the OTE levels. So that's why, I consider this to be a protected stop, because we're delivering off of a high time frame fair value gap and then getting low time frame alignment to continue high time frame trend. Make sense?
That checks out.
Okay, so literally all the time. Thank you for asking that. Beautiful question, dude. Beautiful question.
Yeah. So I've been trading for a little while, and
I feel like there was just a lot of stuff because I've kind of learned on my own. Like I've just picked up things under like my own interpretation of it.
Yep.
And I needed those things to be like cleared up so I understanded them correctly.
Yeah.
And this is what's helping.
Dude, I love this so much. Dude, literally, whenever I'm free, bro, if you guys want to hop on a call with me, DM me, bro. Like, we can set up times. I don't care. Like, what's free for everybody, man? Like, we can do these group calls every other day, you know, every 3 days. I don't care, man. It's up to you guys. I want to get you guys to a spot where you're comfortable enough to take these trades. You know, so
this is literally my setup right here. It rebalances to 50%, comes back down, and then it takes that high and hits the 705 level.
Yeah. Yeah.
But there is a fair value gap there.
Yeah. And that's the reason. Yeah, that is the reason why we went through that protected high on the 2 minute, and then we rebalanced on the 3 minute. Okay, higher time frame holds higher power. We know that.
I love that.
Yeah.
Bread and butter, right?
Bread and butter. That's beautiful. Yeah, dude, thank you so much. Thank you so much for going through this with me, bro. That is awesome.
It's good. Thank you.
Yeah, of course, dude. Yeah. And does anyone else want to take a turn? Does anyone else have questions? I know literally 90% of you guys are on mute and not asking questions and just here to spectate and learn. But if you guys have questions, now is a perfect time. Okay, perfect time. No, you guys are shy. All right, you guys have stage fright.
This is mainly your kind of PM session setup at the moment.
Yeah, so I'd actually hold
with
this.
Asia,
this is
the Asia setup as well.
Yeah, exactly. Yeah, I would hold this, boys, like, because this is protected and we haven't created like an hourly above it or anything like that. This should hold. You know, this should hold following institutional price direction. It should hold, and it should continue until external liquidity, right? Because that's just how the market moves. That's what we understand. So this is why you should be confident in this. Because, dude, I mean, you know, it's internal to external for bearish structure, and we know we're in bearish structure because we just identified that on a higher time frame, right? So this should hold.
I was saying the last few trades you've gone through have all been based around marking out AM and then following it into PM.
Yeah. So this is how I take lunch and PM trades using London and AM session OT every single time. This is my exact thought process every single time. Is that what you're asking?
Yeah. And then I was saying maybe in the next call potentially go through Asia to London as also.
Yeah, I mean, okay. Do you guys want to go through that right now?
Can be tricky.
Yeah. Do you guys want to go through that right now?
Absolutely. I'm here for it all.
Okay, cool. So here's going to be my thought process on swing trades. Okay. There's two kinds of conditions here, and I'll explain this. I already went through this with you guys on Thursday, but there's two kinds of conditions, okay? The condition is after Asia, we display super high, and this is when Asia fib will come in handy, okay? A lot of you guys were confused on how to market. I don't care how you market. I don't care if you do the whole 3 minute body high and 3 minute wick low. I don't care. Mark out the entire session, okay, if it's confusing for you. Mark out the entire session. You're still going to get the same results, all right? So from this point, when we're extended like this, I'm looking for us to retrace into some sort of Fibonacci or, standard deviation level here to reject from, okay? If there was any sort of, price leg above, I would confirm these levels with fair value gaps yet again, right? I will be so repetitive on that. Fair value gaps will be the best confirmation for your levels, okay? But since there is zero, I'm just looking for the first sign of big rejection, which we get from this 3.25 and -3 range, okay? And I like to use fib like this. I like to have sort of support ranges because most of the time you won't see it perfectly reject from here. Instead, you'll see it go in between two standard deviation levels, and you will see it react from the 50% range. So I mark out with a GAN box this every single time, right? Does that make sense?
Yeah.
Okay. Now, from this point on, this is where I'm going to look for my entry here. Okay. I am going to go onto the 2 minute here. Or a matter of fact, I'd probably wait for just extra confirmation like a 5 minute. right? Which is what we get here. I already explained this to you boys on Thursday, but I will go through it again. We get now this first presented 5-minute fair value gap down here, right? And because we're so extended, what am I saying? Okay, we've already went way past external. At some point, we're going to have to get internal movement, right? So to fit the profile, even if we have continuation with London, and we go Asia's continuing trend, London continues trend, then we're still going to have to get a rebalance at some point, right? Because external to internal. Does that make sense?
Yes.
Okay, so here is my thought process here. What fair value gaps are there to target from external liquidity on the higher time frame? Okay, we have an hourly first presented right here that still needs to be rebalanced. Okay, then we go to the 15-minute time frame. Okay, what is the first presented 15? First presented 15 is down here. Okay, so every single time I'm going to play it safe because I'm sleeping and not managing the trade. Okay, so I'm going to bet on trend continuing. All right, almost every single time. Does that make sense? Why?
Yeah.
Okay. All right. So anyways, so we get the rejection from this fib, right? We break on the 2-minute, which is what I want to see. Okay. We get this huge displacement from here. You guys see that? This huge leg right here?
Yeah.
Okay. So that's pretty much confirmation for me that that level was valid and that level is what was going to take us. Let me go and use, equilibrium here. Okay. You can go from this high here. So you want to go from the highest point to now your displacement here. Or you could just do the range that was created with this displacement, this high to this low. I don't care, okay? Most of the time with my strategy, it's going to be the range that displaced, okay? So it's going to be this high to this low because this was a displacement, okay? This had the displacement fair value gap. Make sense?
Yep.
Okay, so then we have now that marked out on top of the conviction that's added with this first presented 5-minute. You see that? Yeah?
Yeah.
All right.
Yes.
Okay, so we see that, right? So I get filled, and this is the exact trade I took. Literally the exact trade I took to the T. Okay, I get filled at the 50% of this 2-minute here because it was combined with this 5-minute. I had a lunch of conviction. Where's my stop every single time? The top of this range. Now, what am I going to target? Well, I'm going to count on London continuing trend. So 1 hour fair value gap down here, the first presented, because I am counting on it continuing bullish trend. Okay? I don't ever want to go against structure, ever, especially when you're going through one of these trades where you're going to set it and then go to sleep. Because the chances are is it's going to fill your hourly fair value gap, 4-hour fair value gap, or 15-minute fair value gap that is first presented and then continue trend from there. Okay? And honestly, I would have had that exact same bias coming into AM because we not only swept London session low, we tapped into that hourly. So I would have expected us to continue trend higher, right? Right?
Right.
Okay, so does this make sense why I targeted the fair value gap? I'm going to do that every single time. I'm going to target current trend that we're in and my predicted draw, which is always going to be a first presented of hourly, 15-minute, or 4-hour, whatever one's the highest or closest to my entry. Okay?
Yeah.
Okay, so does this make sense why I took this entry?
Actually, do you think you would have gotten stopped break even if you were awake?
No. My overnight trades I never I never put to break even. And because I'm asleep and I'm not managing it. But yeah, if I was awake, I might have gotten faked out here. Okay? But what I would have done to kind of help me is I would have put an OTE with London and see how we react to these levels. Okay, and this is something important to note here as well. If you guys are trading inside of a session, you can always use just the singular sessions OTE levels. Oh my God, there we go. To kind of confirm. But yes, I probably would have gotten sketched out here and put it break even and gotten stopped because look at how we're rejecting these levels now. You see that?
Yeah.
Okay.
No, I noticed it there. I was like,
yeah,
dude, like, if he was awake.
100%, dude. I love, thank you for asking that question. I love that you asked that question. Yes, I probably would have gotten stopped out if I'm being honest with you guys, and I would have put a break even, because on top of that, we had no other fair value gaps to fill, right? We inversed this 15 minute. We had no other up here, right?
Mm-hmm.
Okay, so honestly, I couldn't tell you guys why this rejected here. Okay, I'll be dead ass. The only reason why I can say that it kind of rejected is just the 2 minute 50% held. That's it, right? There's no higher time frame.
Was there a higher time frame breaker, or not breaker, rejection? Maybe.
Oh, yeah, rejection.
I'm looking at that rejection wick, and I'm like,
oh yeah. Good call.
That's an entry in my head.
Yes, it is an entry. This 50% of the rejection block. And you know what's cool is look how it lines up with the 50% of the 2 minute. It's literally perfect. It lines up perfectly. Or sorry, no, it doesn't. I apologize. It lines up with the bottom of that range. My fault.
Could you know?
Yeah.
I was trying to backtest kind of like an Asia to London strategy, and it was just I was having an awful time. So
yeah,
it's kind of like
okay, yeah, yeah. And starting out,
AM to PM,
sorry, go ahead.
The AM to PM moves I feel like are personally I think a lot easier, and a lot of it's continuation.
Yeah,
of the trend.
Yeah, absolutely.
But I went.
Okay,
I watched one of Powell's videos the other day just to get more familiar with rejection blocks.
Mm-hmm.
And he said he loves when there's like a high that's right below the CE of the rejection block.
Yeah.
Like that just makes it even stronger because it'll come up, it'll take that high and bounce off the CE.
Yeah, so that's something that Powell calls engineered liquidity. And it's because now you have even more conviction. It's like adding the fair value gap to the OTE, right? Now it's adding even more conviction that we're going to reject from that area because we now also have a high time frame high, right? So now we have two things that should push price down instead of just one, right?
It's funny though when you start to get it, you see these line up the whole time.
Yeah, like
previous deviations. I'm actually looking back at your trade, the one you were going through from the 9th and also the 13th.
Yeah.
And the 4.5 lines up exactly with the top.
Yep. Exactly right, dude. Thank you so much. And that's what I'm saying, dude. Mark these things out and find out for yourself what levels it often rejects from. Like for me, oftentimes it's going to be either 1.6 if it's going to be a manipulation to reversal New York AM most of the time. -2 to -2.5, anywhere within that range is going to be a area where we're going to need retracement. And then -4 to -4.5 is if it's super volatile runner, right? If it's going to be a super volatile distributional leg, it's going to run to that point. Now, something that you'll also see is, we'll have our fib right here, right? And you can just see this is going to be confirmation of bullish. If we break through this -2 and -2.5 and we just displace through, then we get a fair value gap lineup. Dude, a beautiful entry can be if we come back down and retrace to -2 and -2.5. Because remember what I say, whatever can support price or whatever can resist price can support price, right? So we have a range right here that's oftentimes going to reject. If we break through, it can now support. Right? And then if you add in the conviction of a first presented fair value gap, it's a no fucking brainer. And then where are you going to take it? -4. Because now we know it's going to be a runner that's going to go exponentially longer than the -2 to -2.5. And we already had our rebalance. Okay?
I'm looking, I zoomed out after you went through that previous trade that you took on Friday.
Mm-hmm.
And to kind of see where are the imbalances. Mm-hmm. And the kind of only unmitigated imbalances are below there's a 1 hour imbalance and it lines up perfectly with the 3.5s.
Yeah, exactly right. And that's what I'm saying. Dude, I'm not even lying, boys. Just fair value gaps will give you so much conviction of what's going to work and what's not, right? Just fair value gaps. Like, it's stupid. It's stupid because it's such a simple concept. But when you add it with the OTE level, you get stupid conviction that it's going to continue trend at this mark, right?
Or reverse.
Yeah, or reverse, dude, exactly.
I'm just looking at this and it's like just clear as day.
Exactly
like
right.
If you, who's sharing screen at the moment?
That's Dillo. Yeah, dude, Dillo, dude, that's what I'm saying, man. Good job, bro. But
like I see this as a CISD with displacement through that fair value gap, enter the middle of that, and just target London lows, and that's almost a 1 to 8.
Yep, exactly right, dude. And that's a way that you could play it. I wait for it to tap, and then I get my 2-minute 50% respect, and then that's when I'm in.
Yeah,
that's just how I play it, and it gives me a little bit, worse feel, but it gives me more confirmation that I'm correct. That's why I like doing that. But dude, yeah, you could 100% trade it like that. But okay, let me point out what oftentimes you're going to see the profile be with Asia and London. Okay, this is what you're going to see most of the time. Let me go to the 15-minute here. We could even use the other day when I took this trade. Okay, we go from Asia, we mark out the OTE. Okay, so OTE for both sides. Okay, and we're going to have our bias already. Okay, so we're going to look on hourly and 4-hour. Okay, so as we can see, Asia is continuing off an hourly fair value gap, right? We have an hourly first presented that lines up with this 0.705. It would have been a good entry to get in right here, and then, draw it here. Go to Asia low at least, right? That'd been a way better fill. I don't believe I got that fill though, but let me see if we can see an entry here with our model. Okay, we displace through with this 2-minute range. Okay, I'd be looking for the 0.5 to get filled. That's super extended. Holy fuck. Okay, I probably wouldn't have taken this just because of the fact that it was super extended. That's too high of risk for me. But anyways, we come and we tap back up into this hourly fair value gap here, and then we get a 2-minute rejection from that hourly fair value gap. You could have gotten filled at that 0.5 here. But with my London trades, fuck, I'm sorry, boys. My throat's kind of hurting. With these London trades, I wait until Asia ends. Okay? Because when Asia ends is generally when we're going to have the best reactions to these levels. And that's generally when we're going to play internal OTE to external liquidity, or external liquidity to internal OTE, which is how I structure my trades, right? So, all right, once Asia ends, we're still inside this hourly. And then we have a huge displacement range coming from this fair value gap. Okay, we get filled at the 50% of this range here. And we can target, what are we going to target, boys? Well, we're internal right now, so we're going to target external. And we're respecting an hourly fair value gap. Does that make sense?
Yeah.
Okay. And also, I don't know why this didn't work out. Let me go ahead. There might be a 15-minute above. I'm not sure if you guys are looking at the chart as well. Yeah, see? That's why. Okay, this is what I'm saying. Don't take an entry unless if there's a 15-minute lying above. You guys see what I'm saying? Like, this shit literally makes perfect sense when you put it together. This reaction didn't play out because above your stop loss is a 15-minute. You guys see that?
Yeah. There's another 15 minutes above that, though.
Yes, there is. I see that. Good point. Okay, so this could have been a worse quality setup and something I actually probably shouldn't have taken because that was still lying there. So good point. But let's see.
It's probably a higher time frame gap.
Yes, but I can. Here's why I'll say this. The reason why we didn't come up to here and tap this is because we were rejecting out of an hourly, which was a higher time frame than this fair value gap here, and this was an hourly first presented.
Yep.
Okay, so yes, it would be more ideal for me to wait until we tap up into that first presented here, but because we're respecting this first presented hourly, we can leave this here. And usually I would say if it was an hourly or 4 hour, so a higher time frame, yes, that would be okay. But this would be a lower quality setup, and I would go lower risk due to the fact that I could have gotten stop rated, right? So I'm glad that you pointed that out. And if you guys see that, go lower risk, okay? Go half risk on this trade. So instead of a mini, go 5 micros. Does that make sense?
Checks out.
Okay, then at that point, you're risking $300. And if you're going to hit your external draw, which is down here, you're going to get around $1,700-1,800. Okay? Make sense?
Yeah.
Okay. All right, so that's usually how I play my swing trades there. I wait till Asia ends, and then I look for my entry. Okay, sometimes you get it presented in Asia, and if you guys see something like this where we fill the 15-minute first presented, an hourly first presented, or we finally get the second hourly candle opening up after we tapped into this and mitigated the hourly, then yeah, feel free to take that trade, and leave runners to what you believe the draw is going to be, which I usually like trading internal to external. That's what I love doing. Okay, because most of the time, profile wise, even if we're continuing Asia and we're bouncing off these OTE levels, we're going to go to external of Asia. Even if it's a reversal profile, we're almost always going to go to the external of Asia, right?
Yeah.
I don't know if you guys have noticed that.
So you're looking at the Asia like kill zone.
Yes.
First presented. Or something like that. You're not looking at like from 6 p.m. on. You're looking at the 8 p.m.
Well, let's see.
Asia, because like
I'm looking at this leg.
Technically, Asia opens at 6 p.m.
Yeah. So I'm looking at the leg that we're currently in, that we're currently creating, the range. Okay, so you see this hourly high to this hourly low here.
Okay.
I'm looking for first presented created here because we're in bearish structure. Okay. Does that make sense?
Yep.
All right.
Absolutely.
Dope. And then yeah, so we know our bias, and we know that we should be respecting first presented. That's all you need to know, right? Internal to external.
Okay.
That's the model.
Something I just saw on there.
Yeah, and feel free to go through this with me. Jay, if you want to go through this with me as well, please do. Hey, we can go through it another day as well.
Is that most recent? This right here is like, do you not see this as like respecting bullish structure and then
I do
wanting to go take out highs?
I do, but I want to show you one thing. Okay. After we reject that is when we mitigate into here. Okay. And when we mitigate into this hourly, we're looking for respect of bearish structure from this point on, because we're bouncing off of, let me show you. We're bouncing off of a bearish higher time framed fair value gap, a 4-hour, or CISD. You see that? We're bouncing off CISD here of 4-hour. We're in bearish structure on the 4-hour, so that's going to triumph the hourly, right? And you see that happen with the fact that we mitigate this hourly, then we tap into this internal, and then we make moves to external. Okay?
Got it.
All right.
Yep.
So if we were to respect bullish, right? Like if we were to respect bullish, we should not be respecting this hourly, and you should be seeing not a range but volume going through here. Okay? Does that make sense?
Mm-hmm.
Okay. And like even if you got your bias wrong, this is what I'm saying. This is why I love this. Okay. We mitigate this. We come down, we tap the 0.5 deviation, or we tap the 0.5 of the 2-minute range that got created after that tap. I don't know if there's like a 15-minute down here, but we'll just say there was for the sake of this example. Okay. We tap the 0.5. You are targeting high time frame for value gap that hasn't been tapped yet, which would have been the 15-minute. Because that could have reversed us, right? That's the first thing. That's the first presented 15 that can reverse us, or a 15-minute that can reverse us, right? So we have this fair value gap here. You see that?
Yeah.
Okay. So it can reverse us because it's inside of an hourly as well. And that's something, when you're watching the market, you'll understand that. If we have stacked PD arrays, it's 10 times better than them singled out alone, right? Especially when you have a higher time frame, like 15-minute and hourly, in this example, put together. So I would have went break even here just because I know this would have been a good area to reject from. But if you guys went break even up here, you guys would have gotten stopped out from that point. But you guys would have known that your trade was invalid because you'd be looking at the 15-minute and you would have been like, what the fuck is this rejection? Right? You guys would be saying, this was a lot of rejection coming from this 15-minute fair value gap. Right?
A little double top and then...
Yeah, double top, sure. I don't do that whole pattern stuff, but that's how you think, man. Yeah, perfect. Double top. there you go. You get double topped.
See, I like to think like that too, but then at the same time, I'm like, those are two equal highs. Isn't that just like a draw in liquidity?
Here? They're not exactly equal highs. They're relative equal highs.
Yeah.
But yes, it definitely could have been. Like
people say double top, like that's a reversal pattern, but I'm like double top. That's also relative equal highs. That's all liquidity.
So
which one is it?
I'll explain something to you. Depends on the session. AM session loves equal highs. Okay, and Asia session and London session don't really care for equal highs on a lower time frame. They instead like going towards 15-minute equal highs or 5-minute equal highs or hourly equal highs. Okay, those are more important for Asia and London. Okay, it's just like how you're not going to take lower time frame inversions on Asia and London because volatility is not there. So most of the time, the deliverance off of those isn't going to be very probable, right? It's not going to be very probable, especially if you're going counter trend. If you're going counter trend, you're going to get fucked every time, guaranteed. Okay, so does that make sense?
Oh yeah.
Okay, so Asia and London love higher time frame confluences and don't give a fuck about lower time frame. Okay. Put that in your mind, all right? They don't give a fuck about lower time frame. They will disrespect it. They will Jew you. I promise. They will absolutely grab your money. But yeah, this would have been a B setup, maybe even C, just because we left this. Yeah, but I liked it. So did we see this trade?
Which
Jay?
one?
This fill, I'm pretty sure I filled it when London opened, or a little bit before London opened.
Yeah, I was asleep. But yeah.
Okay.
Good. I mean, I need to get into that. See, because Asia opens at fucking whatever.
Yeah.
Asia opens at what even time for me? Like, yeah, I need to sleep at some point, so I missed. That's a trade I missed because London opens for me at 8 a.m.
I get you. And honestly, dude, if you get a fill like this in Asia and you're confident in where the trend's going to go, you can do an overnight trade with this. Sorry, I'm trying to get my position box back, but it looks like it's not going to happen.
Need to find a country to move to that has optimal times.
Boys, we all will, man. Let's just start a trading house, bro. Fuck that fucking bop house bullshit. Let's just fucking start a trading house.
Hell yeah.
The issue with all these houses is they just fucking LARP and fucking...
Yeah, they do. But we won't.
They're just the worst people ever.
We won't, boys. Don't worry about it. We'll have the money. People won't
We
know
can just
because
be
how
pros and not care about everybody else.
Let's all move on to a farm. Let's build like 8 houses in like a neighborhood and just seclude ourselves.
Yeah, the compound.
Hell yeah.
Trading compound, bro.
Listen, I like the sound of that.
Yeah.
That's a good Instagram page, the trading compound.
Trading compound, dude. I love that, bro. Oh, okay. Something I noticed just barely. It just peeked into my head here. After we tapped that hourly, we left an internal high. Or after we tapped that, that hourly, but we didn't tap that 15-minute, we left an internal high. Or no, we didn't. Fuck, sorry. That would have made it way better. I apologize. No, we did not. But we might have left a 15-minute high, which is what it would have drawn from. Yeah, okay, we left a 15-minute internal high here. And let's see, we have that 15-minute fair value gap lying above at that point because we haven't mitigated this yet. Right, so now you have this conviction trade here. Well, we're inside of an hourly. I mean, guys, listen, this first presented up here sucks, but like, I mean, look at this, right? Just go lower risk. Like, you guys see the amount of stacked up, reasons to go down from this point are. We have first presented hourly, 15-minute, second presented, and then a 15-minute liquidity sweep. Like, you guys seeing that? I mean, it's just crazy, right? Mm-hmm. So, if you guys want to add full conviction with this, there you go. Or even if you want to just, mark out the full OTE of Asia, wait for us to reclaim one of the OTE lines, right? So after we reject here, you're like, okay, I'm still shaky on this, right? Wait for us to reclaim this, and then wait for us to tap into like a higher time frame fair value gap from that point, and then get obvious rejection from it. Let's see. Right, there wasn't a 5-minute. Maybe there's a 4-minute or 3-minute lying above. But anyways, you guys see what I'm saying though? Like, just wait for even more confirmation of a higher time frame. 5-minute got disrespected right here. So honestly, yeah, this trade probably wouldn't. I'm not gonna lie, I would have been super shaky taking this as well, boys. Okay, this is kind of like a shit PA. This was shit.
I think you did take it.
I did take it. Yes, I did take it. Absolutely. But here's the difference. Okay, I've been trading this strategy for a long fucking time. So sometimes even just looking at lower time frame and looking at the rejection from here, I'm like, okay, wait, I like it. I'm going to take it.
Won. That's all that matters.
I might be going against my rules like TJR. Okay, TJR just guesses at this point. I might have gambled this. All right? But it looked fucking A+ to me. Okay?
Listen. Take profit to also thought it was A+. So you're chilling.
Yeah, exactly. Ignorance is bliss. Okay, boys? Let's learn this.
Nah, who thought it was beautiful.
Where's that at? What day is that?
This was Friday. But anyways, okay, so this is going to be like the profile that you guys see most days. And like, you know, let's go through one more day where this profile could have applied to the strategy. This also could happen. Go ahead.
I have a YouTube video that I recommend. That I found as I'm kind of digging into this more, it recommended onto my thing, like standard deviations, and SMTs, and like this exact pattern. And as we're going through all of them, it's like lining up. Like 80-90% of them have lined up.
Yeah.
I'll send it into the group chat. It's worth the watch. About it. It brings in standard deviation, SMT, and breakers, which pretty much all of these have been.
Yeah.
Like if you actually go back to the lowest point or the highest point on all these trades, and you check with ES, they're all SMTs.
Beautiful. Thank you for putting that in there, bro. Yeah, that's awesome, boys. Seriously, listen to Jay, man. Listen to Jay. He's explaining it in a good way.
I'll put it in. But it was the algorithm fucking obviously listening to my phone as per usual.
Obviously, bro, fucking Jews, right?
And like it's something that like add confidence to what we're already doing, but it makes perfect sense.
It really does. It really does. Thank you for pitching that in. Okay, and also apply these concepts of developing a bias even in AM, right? Like I was telling you guys, if there's no fair value gaps above, AM has no reason to manipulate. And the only thing it has to do is, rebalance like a lower time frame, like 5-minute or 15-minute, like it did on this day before we had the huge dump, and incorporate that into your trading, right? On top of that, like look at what range we're in. Like we were in Asia range. Look at how we're rejecting from fibs, right? Look, we literally touched 0.5, which was lined up with the 15. Like, so you guys can apply this to AM if you wanted. I don't, because I prefer inversions. But like look at that, dude. You see what I'm saying? Combine them.
That's just beauty right there.
Yeah, that's beautiful. 0.5 of the OTE tapped combined with the 15-minute first presented. Dunzo. I mean, it was fucking beautiful shorts from that point. And like also, you guys will see most of the time when AM opens up in London too. Like look at what we're doing. If it's a continuation, look, literally to the tick. Combined with this 15-minute first presented, it was already mitigated. But look. You know what I'm saying? Maybe there's a 5-minute actually that wasn't mitigated above that. Let's see. Because I don't think I would have taken that. Yeah, no, there's no 5-minute. So I wouldn't have taken that. But just look. Like you see, this happens all the time. Sessions. Oh, fuck. It's filled wrong. But, session OTE always gets rejected. If we're trading inside of a range, these OTE points are always going to be, reacted from. So you can see it just right there with AM, right? And then here again, we're in Asia. Mark out the entire of Asia. Look at what happens. AM to the tick. You see what I'm saying?
Yeah.
So if you guys want to trade AM, like I get this question all the time, like, how do you incorporate it in AM? I'm like, I don't trade AM with this strategy because most of the time we're going to wick huge and then respect on a higher time frame, right? But, this is just something to put in mind here. Whatever range AM opens up in, mark it out. And just, add it to your conviction. Add it to your draw. Right? Again, we open up in London. What happens? We displaced through here. We actually didn't get an entry with OTE, but, we displaced through here. And so I would have been like, okay, if we come back down into here, or hold up, this is 5-minute, check the 15-minute. Here we go, 15-minute first presented. Boom, we tap into it. Look, that's your entry. You see what I'm saying, boys? This shit happens 24/7, no matter what session. You guys just have to be able to identify it. That's the only thing. You guys have to be able to identify it, right? And once you identify it, you guys will see it like no other. Okay. So is that making sense as well? Like if you guys want to trade this Asia, I mean, if you guys want to trade this for AM Open, that's exactly how you do so. Right? Okay. Any questions?
No, this is like just awesome.
Boys, I'm trying to give you all the sauce I can fucking think of. Seriously. This is literally like my entire year and 2 months of trading's experience from failures.
You trade gold?
Yes. Do you want to see my gold strategy?
I love gold.
I actually prefer silver because it has a better reaction to what I do.
I like silver. I don't like being in $1 million drawdown the second.
I agree. Yes, I do not. That's a really good point. But pretty much my only thing with gold that I use is first presented fair value gap, and then I take my trade at 50% of a rejection block. And rejection block for me is when we create a low instead of just a wick.
Every time I've gone to place a silver trade, like I set up the limit, and then I see drawdown that I could potentially hit, and I instantly turn off silver, and I go, nah,
dude, silver actually.
I see potential drawdown, and I go, no, I appreciate my eval, but
yeah, I feel like I'm gonna get sexually assaulted by some Asian fucking dude on the charts. That's just crazy, dude. Like that's what I feel like, bro. I'm like, this guy's gonna ching chong my fucking ass. But anyway, so I look for it to tap into a first presented and then leave a rejection block. And I like to wait for a low to get created and then leave that rejection block wick, and then I wait for a 50%. But if I do not get my fill with that, and if I see that we're trending with obvious volatility, I actually like to mark out the entire candle that rejected from the mitigated fair value gap. And then I like to get filled at 0.5, 0.295, or 0.705, whatever's close. Have you guys noticed that? That if we are in volatile markets with the rejection block strategy, then sometimes we do not hit the rejection block, and sometimes we reject from this area, or this area, or this area here. You see that?
Yeah. So, like, for Asia session, would this...
Are you on gold?
First presented?
Yeah.
Since this candle's, like, technically right before Asia start?
Yeah.
Okay.
Yeah, that would be first presented. And it doesn't have to be of the session. I mean, dude, just look at the leg. You know, just look at the leg that you're in, right? You see that we break down or break structure to the downside, and then we create that fair value gap. You know, that's...
Yeah.
It's just first presented fair value gap of any leg. Like, it doesn't have to be particular to a session. But it is stronger if it's in a session. So thank you so much for saying that.
And you would be looking for, like, the rejection wick of this.
Yes, to get tapped 50%. And what day are you on? Let me go to it for you.
This is just most recent Asia session.
The most recent?
I'm on the 15.
Oh, yep.
On gold.
I see you. Okay. Yeah, but you know, a lot of times I wasn't getting entries from this point. You're on 15 minute, are you sure? This is second presented here. I must be on the wrong day. Are you on gold for sure?
Micro gold futures.
Are you on replay or no?
No.
No way.
That's not gold. You're not on gold futures.
Oh shit, am I on? Oh, good call, bro. Good call. Holy shit. Thanks, bro. Okay, yeah, but anyways, like you see, we tap into this first presented. And then I wait for a up and then down candle, so a high to get created. This validates our rejection block. Then I wait for it to tap into EQ, right? But if we're super volatile, and I see that we are not, you know, we like are just constantly rejecting, you know, sometimes I mark out this entire wick, or sorry, entire candle that rejected, and a lot of the times it will actually reject from, reject from an OTE level, like 0.295 of this candle, or 0.5 of this candle.
This one just ripped, unfortunately.
Yeah, this one just ripped. Yeah, so it's kind of a bad example. But Yeah, that's actually generally what does tend to happen with gold, because it's heavily manipulated, but it's also heavily volatile.
I saw people, they would do like the first 5 minute presented in the session.
Yeah.
And just like take that immediately to like a 1 to 2 or something.
Yes. So actually, yes, I like that you said that. That is really good. Gold, I hate taking fair value gap trades with gold, because gold has such deep retracements that it's common for a fair value gap to get disrespected on a higher time frame, just so that we can either mitigate a rejection block or order block instead, and then we make our move. So you get a horrible fill using fair value gaps. That's why I hate it, right?
I guess you could just...
There's also a million fair value gaps on gold also.
Yeah, there's
like,
a million.
There's just...
Yeah,
like,
really
if you press the 5 minute, there's like 20 above that are just like, when are they going to get filled?
Yeah, seriously. And yet again, guys, like 5 minute can be left. 15 minute, most of the time will not. That's why it's in my rules. And I'm gonna redo the list. I'm gonna redo that checklist.
If you bring up
and I'm gonna write down the
15
rules.
minutes.
Sorry, what'd you say?
On gold. If you bring up the 15 minute on gold, there's 1, 2, 3, 4, 5, 6, 7, 8, 9. There's 10, 50 minute fair value gaps. Currently above.
Yeah, and they're left. Hella. But like, you know, I don't know. Yeah, I don't know. I don't know if my rules exactly apply the same way, because, yeah, like I said, you know, it left this one, and then it takes this one, it creates a rejection block right here, and then it reacts to 0.5, right? You see that?
See it. I think the recent gold pricing is kind of hard to like.
It is a little harsh. Silver. Silver
rules on.
Even though
like, you look at the chart.
Yeah. Even though it's oftentimes where you're going to get absolutely sexually assaulted here, you know, I see that silver reacts way more to the 0.5 than gold.
Like
does.
the 1 hour of gold and the 4 hour gold looks so stupid.
Yeah, it really does. It's actual rape. I'm serious. It's actual rape.
I'm interested to see what happens to Bitcoin this week though when it opens, with all the Michael Saylor stuff.
Dude, I took a Bitcoin. Like, I had a Bitcoin setup here that I took, and it was due to us hitting a key level. And it actually, like, key levels are really good for Bitcoin here. Like, if you see this, I took a swing trade.
Bitcoin strength to help me with my daily bias on NQ.
You do?
Yeah.
Wait, you actually did? That's actually crazy.
If Bitcoin's weak, like, when Bitcoin started to make this dump, so did fucking NQ and everything, and it's just like the strength is correlated.
Dude, I actually have not heard that. I appreciate you saying that. That's actually really cool.
I started off trading crypto. I made like almost 80K trading crypto in like a year, and then I just stopped because I wanted to do futures.
Jeez, fair play.
Jesus, bro. Yeah, good on you, bro.
Good restraint to not just give it straight back to the market.
Yeah, I kind of got lucky on some of it, because at some point last year, I want to say it was in like the middle of the summer or something. I think it's when the war with Iran or something was announced.
Yeah.
Trump made an announcement like that, and it just fucking tanked.
Yeah.
Somewhere I made so much money off of that.
That's bro's just taking advantage of people fucking getting killed. You're like, yeah, matter of fact, let me get in this fucking short real quick.
Have you not heard of
literally, I like top take that short. Like
the new trading technique, taco trading, which is like you wait for Trump to say something, which like crashes the market.
Yeah.
And then as soon he'll backtrack and it'll reverse, like it'll trade a U shape. They call it like taco trading. You like Trump says, I'm going to put tariffs in. Market drops. You buy as soon as it drops because you know he's going to backtrack and it's going to like
100%. Yeah, bro goes back on everything, right? 100% do that. Or if he's in Israel and kissing the wall, dude, fucking instantly take along.
Do you not? Any chance you guys saw how he said he was going to bomb Iran for killing protesters?
Yes, I saw that, and then he backtracked.
So do you know why he backtracked?
Why?
So Iran turned off all the Iran thought there was something fishy about like the protesters all getting shot, because Trump had said, "Listen, we're gonna if you shoot protesters, we're going to bomb Iran. Yeah. And Iran were like, well, like obviously we're not going to shoot protesters. So people started shooting protesters. They went, something's up. We're turning off all the Wi-Fi. We're going to shut down the country. And the only way to use Wi-Fi in Iran then was Starlink, and you're able to track and pinpoint when Starlink is used based on like the signals it emits. And Iran were able to uncover at least 100 Mossad agents who were doing the shootings. And then they went to Trump and they said, if you bomb Iran, we're going to publicly execute all of these Mossad agents because we know that they were the ones who were shooting the protesters. And the next morning he announced he's not going to bomb Iran, even though protesters were shot, because they were all Israeli agents.
Bro, see, that makes so much sense, bro. Holy fuck. That makes so much sense because what's the best way to get a war started? Start some fake bullshit that happened in Iran, and it's even if you're doing
Israel are at war with Iran.
Yeah.
What's the best way for Trump to get involved? False flag in Iran, which forces Trump hand.
I even think that
Iran figured out the false flag.
Sorry, go ahead.
Yeah, Iran figured out the false flag. They were able to locate where all the Mossad agents were hiding out, but based on the fact that they were using Starlink for their Wi-Fi, rounded them up. And now Trump has to bitch out.
Wow. Yeah, dude. That's some crazy stuff. I even think that the Israel and Iran war is just some bullshit to get Israel even more money. I mean, the Iran like a dictator or whatever, he's literally like a self-proclaimed Zionist, bro. You know what I'm saying? Like, seriously. So I think that they're just finding a way to take more of America's money or give people, in kind of a way to get on our side for funding it so that we can end up giving them more money. That's all I'm saying. Kind of feel like that's a little valid. It's a fake war. They're sacrificing lives so that they can give Iran more money, or they can say it's going towards something, but it's actually getting put in people's pockets.
Yeah. Listen, don't trust anything. Don't trust the news. Don't trust the government.
Yep.
Make your money in the markets.
Yep. Make the money in the markets and stay the hell away from, just society in itself. Just get a nice house on a hill and overlook all these fucking broke ass average people that literally want to do nothing with their lives and have no ambition, and stay away from
AI. Doesn't know ICT, so it can't replace
me. You said AI doesn't know ICT?
No, so they can't replace me.
Exactly right. See, and you can't be replaced if you're creating your own money. Listen, if you have a boss, that's the only time you're going to be able to be replaced, bro. I freaking love that, bro. Oh my God. Man, this was a good session, boys. No, I'm going to end this video here.